Hello, I'm Greg Galton, CIO at Portal Asset Management. I'm here to provide an update on the September market commentary, September 2025. My colleague Derek Graham is taking a well-earned vacation, so I thought I'd just update all of our investors on the performance for the month of September. So just going straight into that, September is normally a weak month. In fact, for the last 10 years, on average, Bitcoin's been down around about 7% for September. Very good reasons for that. It tends to be the end of the summer period in the US or in the Northern Hemisphere. And when traders come back from their holidays, they tend to lock in profits. There's also tax deadlines that people need to sell for or sell ahead of. It always historically has tended to be a weaker month. But for this month, Bitcoin was actually up 5.4%, although the broader market was only up 1.3%. What made September different this time around was that we did have a rate cut right in the middle of the month. The Fed saw some pretty weak employment numbers coming out of the US economy, decided to cut rates 25 basis points. So that was pretty widely expected by the market, to be honest. It wasn't a surprise cut. Had they cut 50, I think that would have been a surprise and would have seen markets move higher. Had they not cut at all, I think you would have seen a general weakness in crypto markets and traditional equity markets more broadly. So rate cut came through. A Bitcoin rallied to about 118,000, but then really just sort of suffered from quite a bit of profit taking during the month. It closed, as I said, marginally higher, and really, I guess one of the key things that happened during the month was just the lack of volatility. So Bitcoin's been traded for most of that month in a very sort of tight price range, not giving us any volatility to be able to write some premium income off, and price action that really we just weren't comfortable writing premium income in. And that's marked about the fourth month in a row that we've had that decline in implied volatility. We did touch on that last month in terms of whether that we think that's sustainable or not. And, really our expectations are that low implied volatility really is like a coiled up spring. We expect a lot more volatility coming in from the fourth quarter. We're already halfway through October, which has always been a very strong month for crypto, normally called October. But we've obviously had some pretty big shocks there this month with Trump and his talk about Chinese tariffs. So probably getting a little bit ahead of ourselves, but we have seen that recovery in volatility in October that we had been talking about for the previous 2 months. In August and September, we were talking about an expectation that volatility would recover, and that certainly has been the case, and there's been some pretty explosive price growth both on the upside and also on the downside. But that volatility, it just works really well for us in terms of generating premium income. Now, so the Radiance funds, as I said, Bitcoin was up 5.4%. Radiance was up. Again, that's consistent with our expectation that the fund has a 1.5 to 2 beta to the Bitcoin price on the upside and a 1 to 1.5 beta to the Bitcoin price on the downside. Now, the income that we earned for this month was only 1.5% additional Bitcoin, but we still managed to eke out a double-digit return for the month, which is very good. So we're quite happy with that. And we've already to around halfway through. A little bit over halfway through October, we've already generated 3.5% in premium income. So you can see how the fund can do in a higher implied volatility environment. In terms of Portal Digital Fund, the return there, the fund was up about 1.3, pretty much in line with the market. That's a conservative estimate, so we might actually do slightly better than that. And what we found there that once again, the strategies that are exposed to Bitcoin perform better than the market. So the exposure that we have obviously into Radiance, but also into the Pythagoras Alpha Long Biased product, which is a Bitcoin-based product as well. Those two funds were the best performers for the month, up 11% and 5% respectively. And we did find that the high volatility, fundamental long-only strategies really struggled. They were down sort of mid-single digit performance for the month. It was a sort of a difficult month for some tokens and a good month for others. And if you didn't have quite the right exposure there, then you tended to get a little bit hurt by that. And then we found that the medium vol strategies sort of performed in line with the market, and the lower volatility strategies, more like a cash positioning actually performed slightly better. So reasonable results there, really driven by the Bitcoin exposure. What else am I going to talk about? Some of the other things that we're looking at the moment that we're certainly finding interesting is the continued growth, of the digital asset treasury companies. You've seen a significant increase in the number of those strategies being adopted this calendar year. I think the number has increased to about 110 this year. I think I'm a little bit concerned about this. I think they have run the risk of becoming the next meme stocks in traditional finance sectors. I know that speaking to a few people up at Singapore for Token 2049, a number of people were jokingly saying that they just look for a company that's underperforming, it really isn't making any money, has a dead-end strategy, and then buying that because they assumed that they would eventually move to a digital asset treasury strategy, whether that be them buying Bitcoin or Ethereum or Solana. So that, as I said, they have become a little bit of a meme stock type approach at the moment. So, I'm concerned because we've seen a significant compression in those multiples that they've traded at. So the multiple to net asset value. So they tend to raise equity when their multiple, the net asset value, is 2 times or higher. And they use the cash that they raise from that equity to buy Bitcoin. But then when that multiple starts to fall, there is obviously the concern that they may actually have to sell some of that Bitcoin. And I think that's something that really a trend to really watch for the next 2 to 5 years. So the continued ongoing growth of these digital asset treasury companies and what the potential impact could be in terms of how they've structured these companies and whether they are at risk if the Bitcoin price is lower for a sustained period of time, and whether they become forced to sell their Bitcoin. Now, we're pretty comfortable with what Michael Saylor's done with strategy. We think that, we know that he would have to see a Bitcoin price trading below $20,000 for 3 years or more in a row for him really to start getting into trouble with his exposures, given the way his debt covenants exist and his current expiries are on his debt instruments. So we're pretty comfortable with that. Just some of these newer emerging companies we think probably haven't had the same level of discipline, and they've just jumped into the sector, and investment bankers are all over them because they're earning massive fees off these DATs at the moment. So it's an area that we're a little bit concerned about. In the meantime, ETF flows have been very solid. We almost had record inflows of $1 billion over the last few weeks. So that's continued to support the likes of Bitcoin and Ethereum. And you also had the SEC really make a groundbreaking decision to really potentially streamline the listing process for a new ETF. Now, the last time we saw the SEC do this for an asset class, it led to a significant increase in the number of new ETFs hitting the market. So that is something to look out for in the crypto sector. You'll start to see staking products for Ethereum staking, Solana ETFs, and then Solana staking as well. So there's going to be significant growth in the number of tokens that you see coming out now in the form of exchange traded funds as ETFs. That's going to be interesting to watch. And I think the last thing I really wanted to touch on is just that migration of the OG whales, the Bitcoin whales, into the new institutional holders. So what we've seen the last sort of 3 to 6 months is some of those older holders of Bitcoin that, maybe guys that mined it back in 2010, 2011, they've been wanting to sell their Bitcoin. And if they've previously put that amount of supply on the market, it probably would have seen the Bitcoin price drop 15-25% during that period. What we're seeing now is that hasn't been the case. That supply is being bought up by the likes of the institutions, the fund managers, the ETF guys, and the digital asset treasury companies are all there out buying that Bitcoin that's available on the markets. We have been talking for a while now about a supply shock. We know that there's only about 1.8 million Bitcoin left on the OTC market. That's what the miners bring to the table. But a number of them are now starting to engage in digital asset treasury strategies for themselves as well. So the amount of available Bitcoin that's available on the OTC market is becoming less and less. Potentially the amount of OG whales that are looking to sell could be drying up as well. There are now mechanisms where these investors can use lending platforms to be able to borrow US dollars against their Bitcoin rather than having to sell it, to be able to provide some liquidity for themselves, perhaps to buy a new house or a new boat or a new Lamborghini. We're starting to see that trend coming through as well. So all of this means that we expect a supply shock. And as we've talked about before, in Q4, we're expecting markets to continue to move higher. We are at the start of that liquidity increase, and we've got the Fed has cut rates once already. Market expectations that they will cut at least 2 more times. US economy seems to be reasonably robust, but there are some areas of concern, and we'll start to see that sort of start to come through. So still very much on a positive bent towards the markets. We're still bullish, and we're still very well positioned with that, and looking forward to this continued tick up in implied volatility, which helps us write that premium income. That's it for me. Hope you enjoyed the update, and we'll talk again soon. Thank you.